Let's begin our event, sponsored by MajescoMastek and hosted by Insurance Networking News. I'd like to introduce our moderator for today, Tremblay. You now have the floor.
All right, thank you, and thanks everyone for joining us today for our web seminar, Leveraging Billing Systems to Beat Competition, a Workers' Compensation View. We're sponsored by MajescoMastek and hosted by Insurance Networking News. My name is Tremblay. I'm founder of Tremblay, the Insurance Tech Consultant. So as you can see, I am the consultant. I'm also a blogger for Insurance Networking News, and you may have seen some of my opinions there. And formerly the technology editor for National Underwriter, and for a whole lot of other people too. So I'm happy to be with you here today. And you know, in the current economy and the current insurance marketplace, we're all looking for ways to do more with less, but we still want to remain competitive. And when it comes to streamlining operations to do that, billing might not necessarily be the first place we would look. But we could also argue that as a customer-facing function that is also key to our revenue stream, billing is a crucial area in which process improvements could yield significant benefits for insurers and insureds alike. So today we're going to learn more about how this works in a workers' compensation setting. With us today are Tim Quinn, Vice President, Treasury, Amerisure Mutual Insurance. His chief responsibilities include Treasury, purchasing, building facilities, mail and telecommunications, and credit and collections. And Tim has over 24 years of experience in the insurance industry. Also with us, Anil Chitale, Head PC Product Development for MajescoMastek. He was the co-founder of STG and was the principal architect of the STG suite of products. He has played a variety of roles over the past 18 years in the areas of product development and business development, strategic initiatives, and client services. Also joining us, Mike Fitzgerald, Senior Analyst, Insurance for Celent. Mike is based in the firm's Chicago office, where I understand it's rather cold today, and he has particular experience and expertise in property casualty, automation and operations management, and insurance product development. Now, ladies and gentlemen, to ask a question today, just to remind you, we do encourage you to ask questions of our presenters. Make sure you click on the Q&A pane, type a question in the type of question for the presenter field, then click the Ask button, and use your scroll button to scroll up and down as necessary to see what you need to say. With that, let's get to our first speaker, and that is Mike Fitzgerald. Mike, take it away.
Excellent. Thank you very much, and welcome everyone. Thank you for joining us today. I would like to cover some information, the publicly available information that outlines the broad trends in workers' compensation insurance. And what I'd like to do at the end of my presentation is leave you with the shape of the current status, but also of things to come in this incredibly important line of business for property casualty insurers. Just to let you know, I work with a company called Celent. Many of you may be our clients and may be familiar with us, but for those who aren't, I do want to let you know that we do financial services day in and day out. Specifically, the group that I work with does insurance day in and day out. And as Era mentioned in my bio, that I come from the industry, and I've actually spent a couple of years in workers' comp product development. So glad to have the opportunity to speak about the line today. This is what we'll cover, financial results from the last year and medium and long-term trends, and also the implications of both the financial results as well as the trends for the line. Now, before we start looking at comp specifically, just want to put the line in the context of what's happening with the overall property and casualty industry. You all live this every day at your companies, but just to step back, the net written premium, as this slide shows, has been decreasing for several years. And we thought at the very beginning of, end of last year, beginning of this year, that we might see some price hardening in 2008. But indeed, that did not occur. In 2009, the estimates are a slight hardening. But the latest economic situation is really making pricing very, very soft. The Insurance Information Institute actually provides another data point for this. They estimate that the industry will shrink about 3% in dollar terms and by 8% on an inflation-adjusted basis for the years 2007 and 2009. So there you're seeing a huge drop in overall revenues, and that's mainly driven by the falling prices. Also weak exposure growth, so fewer items of insurance to insure, and then increasing government intervention driving up costs. So overall, we've seen a drop in net written premium, meaning revenues, and workers' compensation is no exception. Now, sorry for the eye chart here, but I did want to get all of this information on one chart just to drive home a couple of points. Let's start at the top. That's the combined ratio from 2005 and 2006, and you can see that we had a good downward trend going from 05 to 06 to 07, but then in 2008 that ticked up above that magic 100 combined ratio. So basically, if you look at combined ratio, it's gone up. The middle line is direct written premium for workers' comp. So there you're seeing it going from $55 billion down to 2008 and $42 billion. And then we broke out underwriting expenses from the AM Best data. So that's the bottom little line with the triangles on it, and there you'll see that the underwriting expenses have actually gone up from 20.8 to 24 in 2008. So if you look at this to all the lines together, you've got combined ratio going up, you've got a declining premium base, and you have underwriting expenses going up as well. So premiums are down, the combined ratio is up, and expenses are up. I just want to point out a couple of things about these gross, these overall numbers, aggregate numbers. They do include California comp, and as all of you know who work in comp, that's a beast unto itself. It also includes the returns for the state fund. So the picture for private carriers is somewhat better than this. In fact, the pre-tax operating gain for private carriers in 2008 was actually slightly above historical averages. But the message from this slide is overall the line is under pressure, and it's under pressure from a loss, an expense, and a premium side. And the message today is how do we react to this environment and what can be done, particularly from automation and specifically in billing, to respond to this kind of environment. Two other things I wanted to point out while we're on the workers' comp results slide. The good news is residual markets are continuing to decline, and that means that more business is coming into the standard private market, and that's the result of a lot of people's very hard work, and that is a good sign. The other is underlying the expenses for the line is an interesting and a little disturbing trend dealing with pharmaceutical costs. As you all know, there's always a focus on getting an injured employee back to work and getting them into even at a light duty or modified duty capacity. And for the comp experts that I talked to, there's an awareness that this has been done, able to be done because of the advances of the medications that can be given, particularly for pain, to allow someone to not return to their old job, say, especially if it had to do with lifting, turning patients, that kind of thing, but at least get them back to where they're in a functional state. The drug prices are going up exponentially, and that's driving the expense side. So there's an interesting balance, a little contradictory in the line where you want to get people back to work and you want to use the proper medications in order to do that. But the high cost of the usage of those drugs is actually driving the expense component of the line up. So just a little detail under these numbers. The pharmaceutical costs are not likely to go down, but hopefully there will be some additional training to work comp adjusters and also to the medical case managers to help use the appropriate drugs and get some cost mediation in the picture. Let's talk about rates. Pricing has been soft, as almost like we saw that in the. This is a backdrop to the premium decline, and as I mentioned, we had some optimism that prices may harden this year, but that's really gone away, especially with the ongoing economic situation. There's another trend underlying these numbers too, particular to workers' comp, and that is that there's a great deal of political pressure to not raise rates. So state legislatures and legislators are under a lot of pressure to keep employers in their state. They then keep them hiring. They do not want to raise rates as long as the employment picture remains soft. As all of you know, we've got 10.2% unemployment right now, so it's unlikely that this pricing is going to change in workers' comp anytime soon, and particularly with the political situation underlying and driving some of those decisions. The loss experience, the good news is that we've seen some decreases in indemnity and in medical costs, but over the long term. But if you look at that box at the bottom, the average workers' compensation indemnity claim increased 5.5% in 2006 and 4% in 2007. I think the main takeaway here is that these costs are increasing ahead of inflation and are likely, while they may be decreasing historically overall, they will continue to be ahead of inflation. So I looked at the NCCI trends and wanted to summarize them in a table. And if you walk away from remembering any of the graphs in the presentation, this would be the one that would give you the cliff notes for what Celent sees happening in the market. Payroll will continue to decrease as unemployment remains high. We'll see some hiring in 2010, and payroll will begin to increase. But particularly for the line, the parts of the line that are on auditable policies, it will take some time until we actually see those increasing payrolls being reflected in adjusted premiums. So basically, the trend is down. You could argue that it'll go down and then it'll go up, but really, I think because of the audit nature of the line, you'll really see payroll continuing to go down, even past where we start to have a net addition to jobs in the country. Exposure, a little bit different there. We see that that's going to go. Exposure will go down as people do continue to be released from their jobs, but then we expect that the exposures will go up as people are hired. So you'll have a situation where you may not be getting the premium, but your exposure is going up. Particularly, there are two important groups of the comp line that have been really very negatively impacted, and that's construction and manufacturing. Those two classes also happen to have amongst the highest rates, and also some big challenges, as you can imagine, in injury and in safety in the workforce. So you may have a situation where you actually have the payrolls down and exposures coming back up again at different times, with exposure outrunning your revenue from your payroll, and so that can put additional pressure on the line. Frequency we actually see as increasing. And it's interesting because frequency decreases as people as people are let go from their jobs, as you would expect. But the other thing that happens there too is that generally people will be let go who have more experience. I'm sorry, people will be retained with more experience, and the more experienced workers tend to be the safest because they're familiar with the workplace and they know the safety information that they need to know. When industry starts rehiring workers, then the new workers come in that with less experience that don't know the workplace as well, don't know all of the safety bits that they need to know, and your frequency actually can go up. So we see that as going up. The indemnity severity as compared with the general pricing level we see going up, as well as the medical severity going up as well. So the picture before with the workers' comp results where you saw high losses, high expenses, lower revenue, in at least the short to the beginning medium term is likely going to continue in the workers' comp line for again, the short to medium term, so through 2010. Let's look a little bit beyond that, just to give you some idea of what else is happening in our in the trends of our society that are going to impact comp. I'll talk a little bit about these items that the Insurance Information Institute highlighted in some of their work around obesity, around an aging workforce, and around distracted driving. It's no surprise, but the actual magnitude of difference in lost workdays between a healthy weight individual and a severely obese individual is pretty striking. It's also important, as you look at this line, I'll explain in a minute, to note that every state in the union except for Colorado has over 20% of the adult population defined as obese. So you're looking at a fifth of every adults in every state except Colorado falling into at least that obese class 1 that's identified on the slide. So it's pervasive, is just where I'll leave that. So the impact on workers' compensation is that studies that have been done on lost workdays find that your most obese worker has 13 times the number of lost workdays as a healthy weight individual. And of course, is in between the healthy weight individual and that person, you've got an increasing number of lost workdays. The other item I'll give you just to highlight this, the importance of this trend to workers' comp, is that workers' comp medical claim costs are almost 7 times higher for the most obese workers as compared to healthy weight individuals. So not only are they out of work more often, but when they do have a comp claim cost, you can be looking at a claim cost that's 7 times higher. Now, this is a trend that's not likely to reverse. If it, there's a large amount of behavioral behavior that underlies this particular graph. It's possible that it will, but the impact on comp is I would rate this as being probably unlikely to see this trend reverse in terms of having an impact on the workers' comp line. Age, well, this is a trend that definitely is not going to reverse, and that is that we're all getting older. And so just to give you some idea, the median days away from work in 2005 were tracked, and that data was pulled out, and by age group. As you would expect, you lose more days away from work the older you get, and indeed the workforce is aging. I think the median age that I saw recently was in the low 40s, approaching 45 years old. So the other issue with the economic situation too to throw in here is that people who are staying in work longer, obviously because of what's happened to the 401ks and investments and whatnot, people are finding the need to work longer. So from a comp standpoint, not only do we have an aging workforce compared to historical levels, but it's likely to increase as well. The The other item to talk about might change, but it does have to do with distracted driving. And the distracted driving is important because if you look at fatal events from 1996 to 2006, you'll see that highway incidents actually have a lot to do with driving the comp line. And when drivers have been polled, 3/4 of us actually admit to distracted driving, which is talking on the cell phone while we're driving. And almost half of us reported that we had been hit by a distracted driver. So some of those examples of people who might be talking on a phone and distracted are people like taxi drivers, truckers, forklift and heavy equipment operators, all of whom are probably going to have some workers' comp policy covering them. So let me just take all of that and tell you a couple of things of what we at Celent think that means. Now, the NCCI is cautiously optimistic about the line, and that has to do with a lot of those underlying private company results. Celent's view is that insurers really need to control what they can because the economic trends, the market forces, the loss trends, and those mega trends that we just reviewed, along with an uncertain regulatory environment, are going to put pressure on price, rates, and losses. So the important piece to communicate here is that expenses and efficiencies have to be gained where they can, and that's essential to do so, and continue to work on safety programs, loss avoidance, return to work efforts. But if it's at all possible to, number one, retain all the clients that you can by increased service, and number two, decrease your expenses while you're doing so, then Celent's view is that in workers' comp particularly, heavily insured companies with a heavy concentration in workers' comp will particularly need to improve their service and decrease their expenses in order to balance some of the trends that we're seeing in the line of business. So what we want to do is look at some ways that we can use billing to help it get some of those efficiencies and also the customer retention aspect as well. And I believe that we have a poll question coming up. Is that right, Era, to try to get at some of those details?
We do indeed. Did you have one more slide there?
I want to thank you for your time, but no, let me hand it back over to you. Thanks.
Not a problem, not a problem. All right, ladies and gentlemen, this is where we get you involved with our little presentation here, and we're asking you this question. What are the most important pain points that modern billing systems can address at your organization? So this is what we want you in the audience to answer. What are the most important pain points that modern billing systems can address at your organization? And your choices are streamline and automate billing operations, design flexible billing, payment, and delinquency plans, enable better agent and customer servicing, have a single and consistent view of customers, reduce high IT costs related to legacy systems maintenance, or are there others? So let me just give you a few more seconds to respond. Once again, the question, what are the most important pain points that modern billing systems can address at your organization? And please use your mouse to click on the answer you want to put up. All righty, I think we're at a point where we can show the results now. And it looks like for somewhere, well, about 37% of you say enable better agent and customer servicing, and you list that as your main pain point, and being customer-centric is certainly a huge part of what we're all talking about in terms of insurance systems these days, so not surprising to hear that. Second behind that, design flexible billing, payment, and delinquency plans. Again, a customer-facing function, something we all want to make sure that we're up to date on. All right, with that, I'm going to turn it over to our next speaker, and that is Tim Quinn. Tim, the floor is yours.
Thank you. Good afternoon, everyone. My name is Tim Quinn. I'm with the Amerisure Insurance Company, and we're a middle market property and casualty insurance carrier. And we specialize in workers' compensation, and we have operations throughout the Midwest, South, and most recently we opened an office in Phoenix. We sell exclusively through independent agents, and we value that relationship very highly. In fact, we only have 120 agents representing Amerisure, and so it becomes almost an exclusive franchise with them. And our target markets, like I said, we are in the middle market, but our target markets are contractors, manufacturers, and we've recently moved into the healthcare industry. Amerisure has been working with MajescoMastek for some time now in installing a billing system. And the first thing we had to do was ask ourselves what we need in a new billing system. And we realized that we needed a comprehensive customer service capabilities for our agents and their customers. Currently, our invoices lacked information, required additional explanation, and a lot of that was due to they didn't know what was owed sometimes, and sometimes it was just simple things like an endorsement number, an installment number, and our current systems were unable to provide that. And also we struggled with how money was applied. And most of our agencies also wanted online access to our billing information. We needed an accurate and a statutorily correct financial information in addition to controls. Today, we manually calculate 90 days in order to meet our SAAP requirements. We perform a lot of manual balancing and posting to our general ledger, so we needed to kind of get out of the manual world. We also were looking at increased operational speed, quality, and efficiency through a streamlined architect and a modernized technology. Amerisure has embarked on a strategic plan to move away from mainframe applications in favor of servers. We also needed to get away from many system limitations and manual processes. We also wanted a proven software from somebody that was knowledgeable in the insurance industry, in particular work comp, and they also had to have a market presence. I'm sure you've all heard of the term vaporware. Well, we wanted a system that that had a track record, something that we could touch and see in the real world. And also, we wanted something that was going to provide a single source of information for our agency bill, our direct bill, and our commission systems. Currently, in today's world, we have 3 distinct systems. Next, we needed to ask, why do we need this? To achieve our efficiencies in our internal processings while making it easier to conduct business with our agency partners and policy and employees. We found that we just couldn't keep running down to the mailroom to pull invoices because they were wrong or we had to manually correct them. Our agents are looking for online access. In fact, some are totally paperless and don't want copies of invoices or policies. They want access to that information through systems and being able to go through that. And right now we're looking at a web portal type thing for handling that. Modern technologies that would allow for more innovative and adaptation to meet business and growth needs. We need to think about the future. Although we're not seeing a lot of demand for online bill presentment in our industry or in our market segment, we are seeing an uptick in online payments. We know that it's just a matter of time before everything will be in electronic form, and we need to have a system to accommodate those future demands. Billing is viewed as a competitive, or is viewed as a key customer touch point and as an essential component for providing competitive advantage. Our credit reps are assigned to specific agencies for all their billing needs, agency as well as direct. It's not uncommon to have a producer or a principal talk to our reps. Often our reps will go to agency visits, and some have even known to go to our insureds. So we need something that really will help us with that to foster that competitive advantage. Our existing billing systems, they're adding a lot of maintenance expense and complexity. Our direct bill system is on green screens. As far as I know, we haven't really taken upgrades, so it's unsupported, so that puts us at a distinct disadvantage. And we don't have any IT resources to fix our commission system because the code on it is so old and it's written in a very old language. So that's also put us at a distinct disadvantage. Then it came around, once we reviewed everything, it came down to why did we select RBS billing system. RBS met 80% of our needs, and the rest seemed the balance of the 20% seemed relatively easy to fix. It met our technical architectural requirements. Vendors will tell you how great their product is, but it's not in production. And the beauty of what RBS was, we were able to talk and meet with actual users that had the product in production. The other nice thing is we were able to demo the product. And you've heard of vapor. I told you about vaporware. Well, this was a great opportunity for us to actually see it in production. We actually got to talk to a lot of those references that we were given, and we got to kind of learn out the pros and cons and the things that they had to go through as they implemented and what they felt about the system. So far, we've gotten very good support during our implementation process. And plus the reference information we received and feedback from the other users on MajescoMastek user conferences helped confirm their decision that we think we went in the right direction. We aren't there yet in terms of post-production support and maintenance, but we believe that we're in pretty good shape based on the relationship that we've had through this implementation process that we've been going through. We've had numerous training sessions that have been very informative and very effective to help us make great decisions as we've moved along through this process. We've spent a considerable amount of energy, time, and money on this project, and this is a long-term commitment, and we thought MajescoMastek would be a very suitable partner with respect to this project. So far, compared to some of the other billing systems suppliers out there that we've looked at, Amerisure feels that it's getting a quality product at a very affordable price. This goes back to my comment, too, about vaporware. What we found out is MajescoMastek, they had a record and they understood the complexity of work comp, and particularly the retro and large deductible accounts that we have and the monthly reporting policies that we deal with. They had we tried to stay with the base system, but like all users, you end up customizing to meet your business needs. RBS has really helped us out with our reporting policies and billing our loss-sensitive accounts. So that customization has been kind of a real positive for us in this relationship. As you go through, you're obviously going to have some lessons learned and things you wish you did and things you didn't do, and I'll try to cover some of those as we ran through this. For starters, you want to get your requirements listed out, and but then make sure that you go through them thoroughly, you review all your responses, and you clarify that anything that may seem ambiguous. And ask a lot of questions when you make site visits and you demo the product. The more you ask, the more you learn, and the more you learn about the product, the better off you're going to be. Document your current workflows, document your gaps, document your future workflows, and document any changes, errors, and fixes you have as you go through the process. Executive sponsorship has been critical to our success so far in this project. Your project will get the funds and priorities to meet the target dates if you have that support. It helps link divisions and avoids conflicts. Myself and the VP of Application work together daily on this project. We are in constant contact, and we have to report to a steering committee that is made up of the COO, the CFO, the CAO, and the CIO. So it's really beneficial that we work together and we make this thing a success. Have the right people that's so critical to your project. Make sure they understand your current processes, your business needs, and are willing to accept change and are dedicated, committed leaders. And it sure doesn't hurt if they like change and like to challenge the status quo and come up with new ideas. Maybe it should be in the don't do slides, but don't dump your requirements on your IT folks and expect them to get this project completed. Users have to be actively involved in every step of this project. We have controlled all the test cases, the test cycles, and actual testing. We've also not limited our testing to just a few individuals. Everyone in the credit department has been involved in the testing. About 5 years ago, we put in an agency bill system. Most of the credit reps were not involved, so we had to have a massive training and programming just before our launch. and it took almost 6 months to get everyone up to speed. By including them now, we have accelerated the learning curve, we have mitigated some of the barriers to change, and have gotten their buy-in and input on improvements. We hope when we flip the switch, they're going to hit the ground running. They will, and they'll feel that they have a true stake in this project. Make sure you have an agreed process for handling additional enhancement requests, errors, and corrections, and make sure you document it. We had a number of focus groups with our agents before we even sent out an RFP. We wanted to make sure we considered their needs in the decision process. Then we went back with our decision, what requirements we were going to include, and presented mock invoices. Even at this point, we got an additional enhancement suggestions for our invoices. Keep them in the loop. They can be your best ally in this during this project. Finally, use a common database for documentation, tracking, and coordinating the project. This will be critical if you are documenting everything. There will be a lot of versions with respect to some items, and you'll always want the current version. For example, in the beginning, we had some people keeping things in their personal drives. Then they would send out the document and ask for updates. And then they would have to turn around and collate and coordinate, and it was becoming a total nightmare. Finally, we agreed to put everything into one project management database. Now everyone can retrieve the most current documents. It contains sign-offs, and everyone can easily track the progress of the project. Okay. Don't take your, I think I'm missing a slide here. Okay. Some of the, okay, don't take your conversion for granted. Map out a strategy with your vendor and get it done the right way. And don't wait. Do it right away and get working on that conversion file. Watch your costs and see a budget. Make sure you get your costs for everything and don't let others just agree to change. For example, we had a team that went through all reports. I'm sorry. Make sure you get all your costs and everything and don't let others agree to change. For example, we had a team that went through all reports that would need or use. The changes to the system were going to cost us over $100,000. When we had a review team go over the request, they were able to cut almost half the cost. Have regular meetings and status reports. Keep everyone in the loop and informed. I'm a firm believer of giving everyone as much information as possible. I like to let them decide what they want or don't want. Challenge everything. Sometimes you don't have to question why you do something or think outside the box of doing it differently. So make sure you challenge everything. Just because you've always done it the same way doesn't mean you have to continue to do it the same way. You might be surprised what you find out. For example, when we asked our agents about our timeline, we were surprised to learn that they didn't understand why it took them so long to bill something or cancel it. We changed a 12-year false assumption by just talking to our customers. And lastly, don't assume you know functionality before designing. It can lead to a lot of headaches and rework. And finally, our live date is now scheduled for January 1st, 2010 for all of our regular business and our servicing carrier. And we will go with our special risk business, which is our loss-sensitive accounts, and we're going to be doing that April 1st, 2010. I'll turn this back over.
All righty. Thanks very much, Tim. We appreciate that information. And right now we have for you in our audience yet another polling question. And we're curious about your potential timeline for a billing system change at your organization. So the question really is, what is your timeline for a billing system change at your organization? Do you think it might happen in the next 6 months, next 12 months, the next 2 to 3 years? Not looking to change, you recently implemented something or you're under implementation, or not relevant to what you all are doing. So let me remind you once again, ladies and gentlemen, that you can ask questions to our presenters, and we do encourage you to post those. And we will try as hard as we can to get some of those at the end of the presentation. Right now, let's show the results. And it looks like 36% of you are already implementing something, or you have something recently implemented. But among those of you who haven't, you're thinking either the next 12 months, or maybe you're not even looking to do this, and maybe there's some good information that can help you to change your mind about that today. Let's get right now to our next speaker, who is Anil Chitale. Anil, it is all yours.
Thank you, Ara. Welcome to all of you who are attending this webinar today. My name is Anil Chitale, and I head the product development function for the PNC product line at MajescoMastek. Just a little bit background about MajescoMastek. For those of you who are not familiar with us, we've been in the industry for over 17 plus years in the PNC as well as the life segment, both in the US and globally. And we have a very strong focus in building solutions, intellectual property and offerings that are focused on the insurance industry. We have point solutions for billing, policy administration, claims, as well as end-to-end offerings in terms of a suite offering for both property and casualty insurers as well as for life and annuity companies. We have a very strong customer base in the United States. We have over 70 customers in the insurance segment, 54 active engagements, and we have a very highly successful implementation track record, which has largely been possible because of the partnerships that we formed with all of our customers in terms of implementing their solutions that they wanted, working with them very closely, understanding their requirements, and making our commitment to their success. In terms of the billing solution that MajescoMastek offers, we have a very proven solution in the billing space with over 40 plus PNC installations in North America alone. We've been doing workers' comp carrier installations also for a while now. We have a number of installs in that space. And we have active discussions and prospects that are considering our billing solution, particularly in the workers' compensation area. Some of the highlights of the solution: we have a very, very configurable solution that has deep functionality in all aspects of the billing methods that are commonly followed in the PNC industry, both direct bill and agency bill. Specifically, from a direct bill standpoint, we do both single policy billing as well as customer or account billing, which is a very, very desired functionality in the PNC space. And on the agency billing side, we have a very strong offering that does not just statement accounts, but also the traditional account current method of billing. And we also have some support for list bill and group bill, which is very commonly used in the life and annuity segment. In addition to having a core billing solution, we also have a module called electronic bill payment and presentment. Although it's, as Tim mentioned, this is not very commonly used today in the workers' comp industry. We see a trend that more and more carriers will be adopting this form of presentment as well as payment for their customers and their agents. So specifically speaking about workers' compensation, we have experience as well as offerings that cater to both the voluntary and the involuntary segment of the market, the assigned segment of the market. And we support a variety of products or programs that workers' comp carriers offer to the industry, particularly those with retrospective audits, deductible programs, dividend programs, guaranteed cost programs, large dollar policies, both reporter and non-reporter premium policies. So we have experience with dealing with all of these variety of offerings that workers' comp carriers offer to their customers. Specifically, from a features list point of view, we have capability to support not just the traditional transactions that are expected of a billing and collection solution. I just want to highlight that even though we're calling it an STG billing solution, it's truly a billing, collection, and disbursement solution. It handles not just invoicing and cash management and collection activities, but also has capabilities to do premium refunds and commission disbursements. And specifically from a workers' comp standpoint, we do have capabilities to support a variety of transactions that are very uniquely found in the workers' comp arena, such as dividends, deductibles, recoveries, audits, both the final as well as interim audits, cancel audits. Some capabilities that require us to backfeed policy administration systems in terms of cancellations for non-receipt of payroll information, and as well as reporting to NCCI for non-pay cancellations and reinstatements, which is very, very important, particularly in both the voluntary and the involuntary segment. From a workers' comp specific scenarios point of view, we have capabilities to support deposits, escrow deposits, loss control funds, collaterals, and these can be either in the form of cash. They could be letters of credit or bonds. So the system comes with capabilities to support all these channels for collecting deposits or collaterals. I just wanted to open the floor for questions. I'm going to hand you back to Era for any questions that you may have, and you have my contact information here. If there's any additional information that is needed in terms of our capabilities and or our offering, feel free to write to me or reach me at any time. Era, back to you.
Thanks so much, Anil. And thank you, everybody, for joining us today. It's time for some of the questions that we have in the hopper. So let's get right to them if we can. Interesting question here. What makes billing so unique at workers' compensation carriers? And who'd like to jump in on that one?
Era, this is Mike. Let me take that. We talked about the industry and its moving parts specifically. That the most important piece about billing from a workers' compensation side for a carrier who has a large workers' compensation business is to make sure that they're working with a vendor that understands the comp business. So I think you heard Anil go down a features list and talk about a number of the different features having to do with audits, final and interim audits, and the management that are particularly important, the reporting to NCCI. I guess the message here is just for anyone out there who hasn't looked for a billing system who has a large workers' compensation book, do not assume that every billing system out there has all the functionality that you need. Your agents are used to working a certain way, and you will want to make sure you align what they're expecting with the automation that you move to. So the most important thing, I think, in terms of what makes billing so unique is managing the special expectations of the agents around how workers' comp plans are often done.
Yeah. Thank you, Mike. In addition to that, I would just like to reiterate some of the items on the feature list that are very unique from a workers' comp standpoint, are really the ability to invoice and collect not just standard premiums, but also deferred premiums. A lot often you issue policies, and there's a portion of the premium that would be billed, and the remainder deferred, which could be adjusted against losses, dividends, or even retrospective audits. So all of that is functionality that's very uniquely found in the workers' comp arena, and that's something that is supported out of the box in the STQ billing solution. Also, the ability to manage collateral funds is very, while it's common in other commercial lines as well, there are some nuances with respect to how collaterals are adjusted against, specifically in the workers' comp arena, and we have support for all of that, so that's another area. Finally, I would like to highlight earned premium invoicing and collection. There's a frequent need to track earned premiums post the expiration of a policy or expiration of a term in terms of how you collect that earned premium, as well as any processing that's required with respect to collecting that. So all of that is supported in the STG billing solution out of the box.
All right, excellent. Let's get to, this is really kind of a key question really for our presentation today, which is this. What is the savings that can be expected by moving to a modern and efficient billing system? Gentlemen?
Let me take a shot at it. I think I don't want to throw a number here, but I would say that it's really a function of what's the current environment that you're operating in. What we've often found in workers' comp carrier segment is that most of them have very old legacy platforms, a lot often green screens based platforms. On an average, a carrier has 3 to 4 billing systems that they're using, some focused on direct segment of the market, some for the agency billing, some handling their special risks. And then also there are other subsystems that are tracking collaterals and audits and some other nuanced exotic requirements that may not be supported in the existing billing solutions. So the savings can be obtained from them. It's really a function of how many billing systems that you have, what is the technology platform that you're using, how much of what different flavors of billing do you offer to your customers today, both agents and your policyholders. And an analysis of that would be needed to determine what the exact number would be. But these are some of the factors that would influence the savings that you can achieve.
Interesting. Okay.
Yeah, this is Mike. Let me just jump in with another point on that, because I agree it depends on where you're starting from as to what the actual number can be. But the other thing for carriers to consider is that moving to a modern billing system is really now a defensive thing. And I think you heard some of that in Tim's comments, where they're already preparing for future expectations, but existing expectations about how billing can be managed. So in addition to doing an ROI based on your current starting point, it's also important to know that this is really becoming just a price of doing business.
All right. It looks like this question would be directed towards you, Tim. What are workers' comp carriers, like Amerisure in your case, seeing as key focus areas for operational efficiency improvement?
Well, I think, like I was mentioning in my presentation, we, especially in our special risk business, that's the loss-sensitive side of it, we do so many things that are manually. We have to recalculate the premiums. We have to recalculate how the retros, and a lot of the deductible billings were all done manually. So moving to an automated environment that we're going to do, we're going to reap all kinds of efficiencies in that area, and also not only efficiencies but the whole quality. Because if you have a lot of people that are doing things manually, no matter how good you are, things have a tendency to fall through the cracks. So we know that if we can get those factors that are associated with those types of billing plans into a system, and we let the system do the calculations and then produce the correct invoice, we think we're going to have tremendous efficiencies within that billing system and produce a quality product at the same time.
All right, good. Thanks, Tim. And Tim, for you and really for other panelists too, fraud mitigation is always a key issue for workers' comp carriers. What are you doing in particular, Tim, and what are carriers doing in general in this area?
In terms of fraud, that's really not in my realm. But some of the things that with this system, we've been able to put a lot of automated controls and checks and balance in this, so that there's a continuous stream of approval processes all built right within the system, so that you don't have people that are touching payments or touching checks in that respect.
All right, interesting. How about any of our other speakers on fraud?
Yeah, Era, what we're seeing is insurers increasingly improving their ability to analyze what's going on from an operational standpoint in their automated system. So first of all, you have to have an automated environment to do this, but there are discontinuities. They're looking for things that are out of the norm. So if you're looking at payments coming in and being applied in a certain pattern, they're looking for areas where payments are out of line with that. On the claim side, they're looking for what type of claims are coming in and at what rate, and they're looking for items that fall outside the normal range on that. And then that's allowing them to do a lot more targeted investigation. So it's basically allowing them a much better idea of where to look. And as a result, they're able to investigate more efficiently, but they're also reporting that they're finding cases that they otherwise would not have discovered. And that's just through being able to do some data mining and a lot better analysis of their automated environment.
All right, good. Let's just throw a final question out to all of you. What do you all expect that 2010 will bring in terms of IT budgets for workers' comp carriers?
Well, this is Mike again. Let me jump in because we're just now finishing up our CIO survey. So if you ask me this in about another 3 weeks, I'll have some hard numbers for you. But initial results are that the budgets overall in the industry are going to be flat to slightly up, reflecting some movement towards particularly strategic projects, which you could really put this discussion if in that light, if your billing was seen as a way, as Tim mentioned, to better serve your agents or to get at some real strategic efficiencies that you wanted to get to. So we're seeing flat to 1 to 2% rise for 2010.